I'm excited to announce our upcoming 2023 Banking with Life client-only event. It's going to happen in mid-October of 2023. It's going to happen downtown Fort Worth, Texas. Our whole team will be there. The team has been working very hard to make this an event that's not to be missed. I'll be there, have an opportunity to meet me, have an opportunity to meet the team. I'm going to be speaking. We'll have other guest speakers, and you'll have the opportunity to meet a room full of like-minded people. Think about that. A room full of people that are practicing becoming their own banker. They are practicing the infinite banking concept. You'll have the opportunity to meet with them and share with them. You got to be somewhere. You might as well be there. In this episode, my friend Michael returns as he was a previous guest about a year ago. We had a great conversation on all things infinite banking concept, from cash flows, discipline, real estate, and controlling the banking function in your life. We had a great time and hope you enjoy listening. Thank you.
I've had some success with regarding the velocity of money, called they call it the Burr method, which is like buy, rehab, rent, refinance, repeat. And so I listened, before that book came out, they were promoting it on their podcast. I'd listened to it. They had some guests on about how you can find off-market deals and contact sellers directly. So when I was still working on the streets in the middle of the night, I would write these 3 sentences that they had a guest on. It was like, hey, this is what I write down, but I developed a company that a robot that writes in penmanship so that I don't have to write them. When I was like, well, I don't have a robot, but I have a left hand. So I was working graveyard at the time. So for about a couple hours towards the end of the shift, the city would get really, it would finally start going to sleep and quieten down. And so I would, go park in a location that was pretty dark and I could see, kept all, the potential bad stuff in front of me. And I would just write these 3 sentences and I would address them to a list of people using the criteria that this guy had on the podcast. So ended up buying a house with that. So it cost me about $1.50 to find this buyer. But yeah, I would literally write out these 3 sentences that are ingrained into my head to this day. And then on the way into the station at the end of the night, I would stop by the post office and I would dump off maybe 40 or 50 letters. And then I probably, out of those 40 or 50, I probably did it for a couple of weeks. So probably a couple hundred letters. And I got like 4 phone calls from it and then ended up finding a house out of it.
Wow.
And yeah. So, and again, using that method, that was my first okay, that's how I can speed up the velocity of money. Like at the time I got a hard money loan, which, for those that aren't familiar with it, it's a lender that will lend money based on the hard asset, and then what they call the ARV, or after repair value, of, hey, I'm buying a current house in its current condition, and here's a scope of work of all the things that I'm going to do with it, and then at the end, if I buy it right, and then if I put this work into it, its future value when it's done is X dollars. And so I just, again, from the book, I was like, okay, well, let me find, I know the St. Louis market, familiar with it because I used to live there, and this is where this property was, and then ended up, my first true one that I did, ended up not only getting all my money back out of the deal, but then I got like a $15,000, tax-free bonus because it appreciated more than my initial estimates. So that was kind of like my first window into that, to how do I use the same dollar like more efficiently, because this, at least I got it back. It was tied up for like 4 months, but I got it back plus some, so then I can go use it again. So that's kind of the path that kind of eventually found me to, high cash value life insurance. I think I told you early on that my first policy was an IUL, because I went to a friend who is a wealth manager, and he, I asked him about the whole kind of general concept of high cash value, and his first response was, how do you know about this? Like, what have you been reading? And I was like, because I was like, Marty, I just need to know, is this real or is it not? Because I don't know anything. He's like, it's real, but like all my clients do it. And I was like, oh, like, okay, so it's not some fictitious unicorn out there. Okay, I like this so far. Like, tell me more.
Right.
And so he had referred me to an agent that he used, which was with I believe it's a mutual company, but it was with an IUL, and so I was I think that premium at the time was $1,000 a month, and then the first time I used, because I knew a little bit about the mechanics of the policy, but at the time it was the property that I just talked about that I created more equity than I originally estimated. It needed a new air conditioning. The HVAC went out. So I told him, I was like, well, I don't want to, when something big happens where I want to repair a whole house, I don't want to be that incident to be the first time that I try and figure out what this policy loan provision is all about. Right. So I'll do it on the HVAC. And then I realized how easy it was. It was, I made a phone call and all of a sudden it's like, oh, I have the money. I was like, oh, this is nice. Yeah. Now, I still don't. Well, I still don't know at the time, and I still don't know today whether it's a direct or non-direct, or even if IULs have that, because I just know that IULs are trash. They just like to eat themselves, so I try and let them just go do their thing from a policy standpoint. But I remember getting the policy loan, getting the HVAC in, and then the little light bulb that went on, I was like, oh, well, instead of sacrificing over 2.5 years of cash flow on the property, I can at least let my tenant pay back that policy loan. So I'll just schedule a portion of that cash flow to go back and pay the policy loan. And then at the same time going like, oh my goodness, like this thing's for real. That was easy as far as accessing it.
Yeah.
And then, later on, during COVID, I had my first, like what I thought was, as I'm continuing to learn about the process, had the first policy not with you that could be designed better, but it wasn't to the point to where you felt like we needed to replace it or exchange it. And then luckily I went to the purist that, as others refer to you as, oh, you're just, you guys don't just evolve, and you're not trying to get as fancy as everyone else. So they're just doing their own thing that I fell in love with, and the foundation of, like you and your network. Cause I believe I told you before we went on air that, I know you've been on Bruce Wayner's podcast before on the Money Advantage with, Rachel. I don't know. Forgive me. I'm forgetting.
Marshall.
Yeah. Marshall. But when I started just to see like who you were, and then who you surround yourself with, and the basis that, the foundation you guys keep going back to, and cause it really, a lot of it is, the way I see it from an outsider is, you guys are secondary. All you're trying to do is continue the learning that Nelson discovered and then taught you guys. And then you're just kind of the conduit of it, and kind of, helping us understand with words and examples, like what he actually meant, like maybe sometimes in practice. And for me, that really resonated with me. So that's, kind of how, I thank goodness you took me on in 2021, and now unfortunately you can't get rid of me. So yeah,
every time he comes forward, hopefully.
Yeah. No.
Yeah. I like that. Now, if I, a beautiful friend from California, client, told me I was the worst salesman in the world. Now I'm the worst secondary salesman in the world.
Yeah, you're pretty much right where I want you.
Yeah. I love that, because yeah. I mean, I get up every day and, I work a lot, and, I just want to convey the fact that you can become your own banker. And then what does that mean? Right.
Yeah.
And how do you do that? So,
yeah, for me, it starts with the discipline, and I have just knowing that I have a contractual obligation to pay a premium. But for me, like that initial transition of, we're like, and I don't know if you were like this when you first started, but the current structure in the marketplace, or just in everyday life, is we're used to, earning an income, letting invisible Uncle Sam like to partner every deal with you and take about half of that.
Yep.
And then you get what's left over, and then you just start farming out payments to other people. And as I started, like during the, going through this transition, and I'm there now, but it's cool to look back, but getting over that initial old thinking of a premium is I'm making another payment.
Yep.
to someone else. I'm like, no, bro, this is the conversations I have with myself is like, dude, you're not paying Honda insurance or Honda finance for your car. Like you're paying a premium into a vehicle that you have direct control of, and to its profitability and to its efficiency that you can access. So like, get out of the old thinking of I have to go log into my bank statement to see where my money is. Like, some of it's going to be there,
sure, but
you also need to go over here because this is where it resides now. That has like 3 major components. It's safe, it's liquid, and it's growing. Right? Because that's savings. That's not speculation. That's savings. And so once I kind of got into that not only in that discipline of looking different places to where my initial wealth is, well, not really wealth because there's no goods and services there. It's just monies that I can go create wealth with. But that's where my money is residing for right now. And I still have control over it. So it's like, okay, now that I've that's my new foundation. My money is just somewhere else right now. And realizing that it's not, I have the car and now I don't have the money because I made the payment. It's, well, I think I told you off air is I just initially just purchased I sold my vehicle back in November because I wanted to take advantage of the used car market because I'm not married to anything anymore. It's just a piece of metal and some things that are, at the end of the day, destined for a junkyard, right? So I was like, but if I can make some money on it right now, it sits in a garage, I'll make some money on it. So I ended up selling it in November. And then within like the last 3 weeks, I just replaced it. One, because I was looking for a pre-owned car, Japanese made, because of, my prior history with Anheuser-Busch and reliability studies and such. But I was looking for a kind of a range of car, but I told myself this is the umbilical cord from the lender, the third party lender that I'm cutting. So I'm using policy loan for this. So I'm on the hook for this. I got to go to myself for the money. So found the car, and it was, I don't know, it was very powerful yet uneventful, which is the way I think it should be.
Yeah.
It was
not traumatic.
No, it wasn't. No, it was. It's a joke. It's a joke. It's funny, But it all starts with a systematic way of accumulating capital, right? Mm-hmm. In a place that you can control. And so I just got the policy loan 3 days. It's in my account, and I use a car broker because I hate dealerships, so I'd rather pay them $300. And I've done this several times now. It drops off at the car gets delivered to the house. I don't have to go to a dealership. So I'm like, $300.
Please.
I'll do that all day and twice on Saturday. Yeah. So, so just.
That was a trauma that I was referring to.
Yeah. Yeah. So it was like, hey, what, the drama was, okay, where are you going to park this truck? Cause I know where I live and there's no room for a semi, but you'll figure it out. Yeah. And then the rest was, well, how do you, do you need financing for this? And I was like, oh no, I'm just going to wire money. And they're like, I'm sorry.
Yeah.
And I was like, I'm just wire money. Wire the money, the car gets there, and then, part of being an honest banker is okay, well, yeah, there's great privilege in being the loan officer and the owner of the bank and the shareholder of the bank and the lender, and having, getting to have all those hats all under one roof is okay. I know personally what I paid for the car, and I know that I'm probably, I was just kind of estimating, okay, what payment would I be happy with? I was like, well, let's see what the market kind of generally is. So I, spent half a minute looking at used car rates and came up with, I don't know, it was $200 or something like that, $200 or $300 per month. And I was like, okay, well, all right, this is my bank. I'm going to do things the way I want. So I'm going to pay more than 3 times that a month. Because for me, going back to, what's been instilled in me now is, well, one, all I'm doing is I've replaced that banking function that someone else had prior. So when I make, on Friday, I'll make another half of that payment that starts with a comma just because I thought it was fun and I put 2 seconds of thought into it. But I'm not losing control over that payment. It's not going to, to a third party lender. It's going back to reduce the loan amount on my policy, which is, from my understanding, what little I know about infinite banking, is principal first. All right. So it's going to go back and pay down that policy loan, which if I need it in 10, 15 days because I needed that dollar amount plus my other cash value that's in there to go take advantage of an opportunity, it's there. It's not in someone else's hands. It's right over here that I can access.
There's a lot there. Did you go through the mental gymnastics of interest rates? Here's a policy loan rate.
No, I don't care. I don't really care anymore. And I'm a numbers guy, James.
I know.
I don't care anymore.
You
really.
have a degree in finance and economics, there.
I'll pencil out a real estate deal before I spend some money like that.
Sure. Well, you penciled out the deal on the car. You chose the car and the price and all that.
But James, listen, it goes back to the teachings, like for that. Thankfully, that I continue to learn, and you and Ryan and others that have been, in this chair that continue to talk about it. But it's about volume of interest and it's about control. And so I don't really care what the rate is. And I just know that
you quickly get there. You quickly get there, and you've been there for some time. Have you been doing this 3 years? Going on 4?
Yeah.
That's pretty quick. But
the real responsibility is me to not not overextend myself. Just because I have access to capital doesn't mean that every shiny object it needs to be in my driveway or whatever. It's okay. What are my core principles? What's important to me? What are my financial goals, or what are my non-financial goals? And then while I'm working to achieve those, I'm pretty sure I'm going to need capital. So I need a systematic way to accumulate that. So I hear your words a lot in my thought processes now, and Nelson, I think I may have told you a while back, but I hear Nelson's voice the more I've listened, because thank goodness on our client content, you can hear a lot of his, not only have I listened to his 6.5 hour presentation, but his other talks from like Houston and some of the Fort Worth, I know from like 2015, 2016, is the more that I hear his cadence and his voice and how he tells stories, because he's a teacher through parables, which is it's biblical. And then too, like that's how it's very powerful for me. Like that's how I learn.
Easy to learn. Right.
Very easy. But I hear his voice and I hear your voice, and in the book, I can't now when I read the book, I read it, I can hear his voice, and I slow down and I read it. Because when Nelson would go, okay, I can hear him in sections of the book, which is awesome. Yeah. But yeah, so just things like that have gotten me out of the stop chasing rates, or even if that was a priority, which it really isn't anymore. It's just control. Basically, and that retaining that volume of interest that I was giving up. So I'm like, well, I know that I'm doing those fundamentally, so the rest is just gravy.
I like the, so you go to the lender, and in your research, I don't know where you can finance a car for $200, but sure, it's possible. But I'm going to pay 3 times that. The things that I see, most car payments that I see, people are driving around and they're paying.
Sometimes there's a comma involved in the lease payment, or just for the sake of I don't know why, but
and then you add on the insurance and all that goes with owning a car and driving a car, and it's like, my gosh, I could buy a house for that payment at one time anyway. But you're practicing the velocity by throwing more money at the loan. You're paying down the loan, right? And there is loan interest, and you're reducing the actual loan interest because those are annual loan interest amounts, and you're going to shred that note. So you may or may not actually pay the stated loan interest rate, but you're practicing velocity because as soon as you make a premium or a loan repayment, just like you said, about 18 days or so, in my experience, most of the time it's 30, calendar days or 20 business days. That capital is accessible again. All right. And then, the life insurance company has to be profitable, period, or they're not going to be in existence.
And I want them to be profitable.
Exactly. Because being a mutual life insurance company, then you're in an ownership position. And the life insurance companies don't make bad loans, policy loans. They can't. 100% collateralized by the cash value, right? So they're not going to make a bad loan, right? So they're going to be profitable when they charge a loan interest rate. And then, kind of going back, this adds into what you stated earlier. The actions of the owner of the policy has a greater bearing on the result than the life insurance company. And that's powerful if it's true, and it is, and you think through that, right? You have those several self-conversations or an experiential,
Yeah, because I know, when Jamie was here, I think it was maybe 3 or 4 podcasts ago. I know he was here probably a little bit longer ago than that. But he and I, I've shared with him, I would have like a payday calculator, and initially that really helped me, and it still does, but it helps me when I'm creating that discipline of I know that, some of them, my goals are to max fund my PUAs every year, before I do anything else. Right. So, because that's a priority for me. It's only going to be more cash value and more death benefit. What's the negatives in that? And so I have a little, maybe 12 cells, and it doesn't get into the nuts and bolts because it doesn't need to, into the weeds about, where my money goes. Is every payday I look at, hey, what's my ending balance on my checking account? What from a payroll perspective from my employer, what's coming in? And then what major expenses do I have coming up in the next 2 weeks, since that's how frequently I get paid. And so right then in the less than 2 minutes, I can kind of come up with how much cash that I have left over, that needs a house. So it's just okay, well, can I, again, from your teachings, because I go through it all the time, as can I pay a premium? It's either a premium or a loan repayment. Where am I? So I was like, okay, where am I in my cycle? Well, my anniversary date on one of my policies in June. I can't put any more PUA already because I've already max funded it, which probably next year we're going to have another discussion about going through underwriting and stuff. I need another home for some more cash.
What a problem to have. And I'm not, that's beautiful.
Yeah. But it takes the glamour off of just because I have cash, I need to spend it. It's no, I have cash, I need to store it somewhere. Yeah. It's not cash to spend, it's cash to store. But then, that mental exercise, it takes half a minute, and I know where I am because I look at I'm kind of like Bruce going in his podcast. Every morning he wakes up, he looks at his accounts. I do the same thing because I have to.
Does Bruce look at his account every day?
It's what he says.
Because if he's only got one, I'm going to crack on him. And then if he looks at it every day, I'm going to crack.
I think there was an S on. I think it was accounts.
Okay,
that is what.
All right, Mr. Wainer. Next time I see you, we're going to have a conversation.
Yeah. So that's what I do. Is can I make a premium payment? Well, no, I can't. Okay. Well, then can I make a loan repayment? And then so that's the conversation that I have. So let's say, for example, hypothetically, I have $3,000 that I don't have a home for right now. It's just excess cash. So
just call me. I can help you.
Yeah. So what I'll end up doing is I have a special account that I'll put maybe $2,000 of that into a future PUA account. And then I'll take the other $1,000 and just make a loan repayment, because I do have some investments that I've used policy loans for, that the initial time I get an investment, I just make a loan repayment. I don't let it sit somewhere. I just let it pay off my policy loan by, say it's $1,000. Well, then I have this excess $1,000 that I've segregated from the $3,000. So I'll make another $1,000 loan repayment. And it's okay, what am I going to do for 2 weeks? That's about all the thought that goes into it, James. But then it's okay, well, I'm going to go earn, because in 2 weeks I get to repeat this exercise, and this little discipline creates the freedom for me for the next 2 weeks of knowing all the bills all the major bills are paid. I leave some wiggle room in there in case, my car insurance, auto debit, whatever. It usually doesn't come up to very much, but that's about it. That's about the money stress that I have, keeping the rental properties occupied and stuff, and looking for deals. But that's try to minimize the stress I create for myself. So I'm human.
Love that. I love that. And you got a flight to catch, so we're going to have to wind down. But there's a lot there. Before we, turn the cameras on or whatever, you have the lovely conversations. That should wind up somewhere. There's really valuable stuff there, in my opinion. But then sometimes things are said, that won't ever see the light of day. Nothing bad or nefarious, just not mentioning names and things. It's like the banking, right? Banking, it's the movement of money right? Loans, loan repayments, deposits, withdrawals. And you have the discipline, and you've applied that discipline not only to building capital in the most efficient way that I'm aware of, and then integrating it to everything that you were going to do anyway. But you've maintained, you've applied your discipline in life to your cash flows at a greater level than you could previously without banking. Is that fair to say?
No, yeah, easy.
And then before we turn the mic on, like I said, I mentioned, I said, because we were talking about cash flows and the different things he's done, which we're not even going to have time to go into some of the things that you've done unless you want to, we briefly spit them out. But I said, your money's like a horse. Look at me. It's like, if you don't give a horse a job, he'll wander off. And you're not allowing your cash flows to wander off because they have a job, they have a purpose, and you have the discipline to make that happen. And that's a beautiful thing. What is wrong with that? What is wrong with that?
Yeah,
and then you're going to leave your nieces at the ultimate end, the net death benefit. When you graduate, it's going to go to someone else that you love and care about, and you're controlling all that. And then you have taken over the banking, but most people abdicate their responsibility of the banking function, and it exists, right? And like when you cut the ties off of that last loan, you wasn't penciling the rates, and you weren't doing all that. You knew intuitively. You've had the experience with banking loans, loan repayments, with the embedded banking concept, doing the real estate, doing the different things you do, and it was a 2-second. It was zero time. Here, I'm. That tie is cut from the banking.
Yeah. So but I have personal experience with it, but then, too, that's, you don't just write policies, you're a practitioner yourself. So, once a week we get reaffirmed of that we're heading down the right path, not from someone that's trying to sell you something, but who's actively doing the same thing. So
I don't get up every day and look at my policies.
Well,
I'm just saying there's nothing wrong with that. I did early on, and now I'm like,
and it may be another thing, just like what I did with the car note, that I don't really care anymore.
But it's still nice to see the numbers going up. They're only going to go one way.
Contractually, they have to. So I don't know why. I'll probably maybe one day I'll ease my foot off of the login and password and won't look at them.
No, you won't.
But
it's okay.
It'll be just give me a little time.
Because then when you get the next policy, you're going to watch that. And then too, we also briefly talked about the, like in the first year of a policy is the least amount of liquidity, and I forget the terminology that you use, but it's actually, it's just
I think I said maybe it's the least efficient that it will ever be, because I'm right next to the x-axis and the exponential curve of the policy, and it's already done some really great things for me. So
it takes discipline to stay the course in the midst of the noise, to go through that, and you can't. You can, but it's not going to be ultimately long-term successful and beneficial in my opinion, in my experience. You can't contort a policy design to shortchange that. It's like, I don't want to lose that much liquidity in the first year, 2 or 3 or 4. So I'm going to jank the policy design, to avoid that. And you're not. You're just pushing the problem you create new problems, and they're pushed off down the road. And my point here is that complete agreement with you. It's the least efficient in the first year. And then the second year, and then it just gets more and more efficient the longer it exists. But it takes discipline to endure that and go through. And how long does a year take to pass? It goes in a flash. So it's worth the discipline and pushing through and avoiding the noise to go through that inefficiency.
I'm just ready for June. I'm ready for the next annual statement.
Well, I appreciate that, because you're gonna be in October. You're gonna be in Fort Worth at our live event.
Yeah. The boys from Mississippi are coming with their wives, and I think a few other people are coming from California, and I hope at least everyone that was there last year was there. It was a fun time. Hopefully I might visit Massey's while I'm in town.
I got you. Yeah. They're not going to cater this one, but and I'm bringing that up because I want everybody to be aware that you have an opportunity to meet guys like Michael in October in Fort Worth, but you got to be a client, so you have an opportunity. But kind of what we've covered today, because in conversations, James, what are you going to talk about? Well, I don't know. And just the other day, I had the opportunity and I took it, and what I'm going to talk about is an awful lot of what you've shared with us today as far as segregated accounts, loans, interest, and much more than that, though. But
I mean, I'd like to come, to talk about some specific deals, maybe if I were to come back and stuff, just to, for those that are, that are out there that, you're more well versed than anyone, but just to see how others are actually using their policy, I think that can be, eye opening. Go like, oh, I didn't think about it like that. And I was like, well, I didn't either until I, talk with you or other people and like looking when you have that control, you can start getting creative and again, like Jamie and and his brother and stuff, for example, like they have a completely different set of skill sets than I have, which is awesome because like they see the world differently than I do, and that's what that's why it keeps me bugging them on the phone. I'm just like, tell me more. Like how do you how does that make sense to you? That doesn't make sense to me. And then it's usually it's usually the same way on the phone. Like, how do you know this? I was like, I don't know, bro. I don't know my brain just works like this. This is one that I was dealt. That. So,
and y'all met at the last October event. Yeah. I'd love to stay and chat. You have to come back because you do have a flight to catch. Thank you for listening. I had fun. Thank you very much, Michael.
Thank you.
All right.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.